Hey, welcome again today to another video. As a business person, one way for you to be able to know how your business is progressing is for you to keep good records of whatsoever transactions that are taking place in your business. You must be able to know how to monitor the inflow and outflow of cash in your business. That is why today in this video I am going to be talking about all you need to know about basic bookkeeping of your business. In this video, I am going to be covering, first of all, the most important financial terms you really need to know. Second, the most important thing you need to do with your business finances. And the third thing I'm going to be talking about in this video is some different software you can use in your business bookkeeping, and also how to choose which one is best for your business. And finally, I am going to be talking about the first steps you should take to keep your bookkeeping on track. We all know that money has the potentials to be a stressful thing to us and our businesses. And these issues are compounded when our money is not well organized. That is why it is very important for us to know how to manage and organize the money of our business in order for us to avoid some of the stress that money can really cause to us and our businesses. So in today's video, I'm going to be walking you through all you need to know about the basics of business bookkeeping so that you can be on top of your business finances. Now, let's begin by covering these basic financial terms that you should know in order for you to be able to understand money and organize your money. The very first financial term you need to know is that called asset. Asset is everything that is owned by the business, is the assets of your business. It can be from the inventories or the buildings or cars that your business owns. The second financial term that you need to know about your business is liability. Liability is everything that your business owes people outside, okay? So when you are owing or you borrowed money from people to invest in your business, then that is a liability because you have to pay. So liabilities are all the debt owned by the business, while assets are those things the business owns. The third term we need to understand is equity. Equity is what the business owes you. That is, everything you own in the business is your equity. Or if you have some shareholders, then whatsoever thing the shareholders own in the business or the business or the shareholder is the equity of the business. If your business is a small business and you are the sole owner of your business, now when you subtract your liabilities from the revenue, then you will find the total value of your business. And since you are the sole owner of your business, when you do this, whatsoever thing that is left becomes your equity. And that ties directly to what we call your business balance sheet. What is a balance sheet? This is a financial report which you or your bookkeeper can generate from your business that shows your business balance. The balance sheet of your business shows the total asset owned by the business minus the liabilities of the business at a particular period of time. The next term we need to understand is cash flow and cash flow statement. Now, the difference between a cash flow statement and a balance sheet is that the balance sheet takes into account all the money that is owed to your business and also money that your business owes different entities. But on the other hand, cash flow statement is just focused on the cash that is coming in, that's the physical cash getting into the business and the physical cash that is going out of the business. So you must be able to understand the difference between balance sheet and cash flow statement. Balance sheet has to take into account everything that your business owes other people and also what other people are owing you. But on the other hand, cash flow statement is basically focusing on the money that is leaving the business and the money that is coming into the business daily. The next term as a business person you need to understand is income statement, or we call it profit and loss statement. An income statement is a financial report that shows what your business earned in a particular period of time and also what amount of money was spent out of the business at a particular period of time. In other words, this statement shows the revenue that comes in and also the expenses that was made in that particular period of time. When you subtract your expenses from your revenue, then you will be able to determine or know what is the profit of your business. It is very important for you to know how to record all of these things in your bookkeeping so that you can be able to determine if your business is profitable or not. At every point in time, you'll be able to examine your business to know if it is doing well or not doing well. But if you fail to maintain this record, then you will not be able to know if your business is doing well or not. The last two terms that you need to understand as a business person is account receivable and account payable. Now, account receivable is referring to all the money that your customers are owing the business. So every money that you are expecting to receive from your customers, maybe those who bought on credit and they have to pay back that money into the business. They are the account receivable of your business. Now, account payable refers to every money that your business needs to pay those you are owing. When the business has collected maybe things on credit from other people, now all of them are account payable because the business needs to pay back all of this money. All right, now that you know and understand what these financial terms mean, let's talk about the very most important thing you need to do to set your business up for financial success. The first thing as a business person you need to do from the very beginning of your business is to set up a business account. You need to go to the bank and create a business account for your business. Why? Because it is very important for you to operate a separate account for your business from that of your personal account. It might be difficult to create a business account, a separate business account for your business, especially when the business is not yet registered. However, you can go to the bank and create a separate personal account. This account can be exclusively used for your business, and this way you'll be able to monitor whatsoever income that is coming into your business or whatsoever expenses that are made from your business. Now, some people might be wondering how they can do this, especially when their business does not have any money. Well, what you have to do is you need to take a certain amount of money, the money you think you want to invest in that business, create a business account and put the money into the business account. Then from the business account, you are going to be removing that money for whatsoever thing you are spending to establish that business. In as much as it is money for the business, don't just start removing from your personal account and spending in setting up the business. Instead, set your business account first. Take the certain amount of money from your personal account and put in this business account. Then from the business account, you start spending from your business account. So in order to keep your business money organized and to track all the transactions that are taking place in your business, you would need some software to help. However, some people might not afford to get a software from the very beginning of their business. You can use manual way of recording the transactions of your business by just having a pen and a paper or a book to record whatsoever thing that is happening in your business. But in this digital age where we do a lot of transactions online, it is very recommended that we have a software to help us do the bookkeeping of our business in order for us not to stress ourselves too much, such as QuickBooks. QuickBooks is a software that is very good for bookkeeping, and most people are using this because it has so many advanced settings that helps to ease the work of a bookkeeper. FreshBook is also a bookkeeping software that most people are using, and it is much more affordable than QuickBooks. Most people are familiar with this one. Wave is another alternative of a bookkeeping software that you can make use of in keeping records of your business. Now, one good thing about Wave is that it is a free software that you can use for your business, although it doesn't have most of the functions that QuickBooks and FreshBooks are having. But if your business bookkeeping is going to be done by yourself, I am going to recommend that you go in for this because it's a free software that you can use. However, if you are just starting your business, I am going to recommend that you go in for spreadsheets. What I like to use a lot in my business and my bookkeeping is Google Spreadsheet. With Google Spreadsheet, you can be able to create each column for each of your records. That is your assets on one side, liability on one, then your revenue and expenses. So to wrap this up, the first thing you need to do as a business person when starting your business is to go to the bank and create a bank account for the business, or you can create a separate personal account and you use this exclusively for your business. The second thing I am going to recommend while starting your business after creating your business account is to create a spreadsheet to be recording whatsoever financial transactions you are doing in your business. If you're working to start your own business or you are planning to do so in the future, then be sure to subscribe to this channel to get access to all my videos on business. Well, that is all for today's video. And if this has been helpful and you found it interesting, don't forget to give it some thumbs up, and also don't forget to put your comments in the comment section, and see you in the next video.